Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking a quick look at the New Zealand dollar and how it's trading versus the US dollar. So let's look at it over the last couple of weeks here, shall we? I've got it here, the NZD USD chart on a 4-hour candle, and you can see if you look back to mid-June, this drop here, that was the hawkish shift in FOMC, at the FOMC, basically when their dot plot became a lot more hawkish and their tone on the economy became a lot more upbeat. And you can see pretty much since then, the currency, well, it's had this attempt here to sort of move back to its pre-hawkish FOMC levels, but it's failed, and it's for the most part been sort of trending lower. However, if you look at the performance of NZD since the hawkish FOMC event back here, if you compare the NZD's performance to, say, AUD or some of the other G10 currencies, it's actually been doing pretty well. And that's because at the same time as the FOMC's become more hawkish, the RBNZ, the Reserve Bank of New Zealand, has also been becoming more hawkish. So you can see here that we've only been under 0.69 very, very briefly back towards the end of July, and we've actually been pretty well supported in the last couple of weeks. Even you could argue in the last 2 weeks there's been this upside bias. So what next for NZD? Well, you can see here, this is my area of support. Imagine if jobs data is, so by the way, we've got 2 key jobs datas out this week, one from New Zealand, one from the US on Friday. If the New Zealand jobs data is bad and the US jobs data is very good, then we could see NZD push back lower. If, as I expect, the New Zealand jobs data is good, however, well then this area of resistance here around this 0.70 level that we've been kind of struggling to break convincingly above could go, and we could perhaps move towards the 0.7050 area, which is this high from the middle of July. However, are we going to see a massive break above that? Well, this week, I think probably not, because US economic data, NFP on Friday, is probably going to be strong, which should cap these gains for now. However, later on in the month, we have the RBNZ meeting. And if this week's jobs data goes well, then you can pretty much bet that the RBNZ is going to hike interest rates by 25 basis points. So when that hike does come, well then I think there's a good possibility that even if the dollar is doing well because of strong US data, I think there's a possibility that NZD could be an outperformer in the G10 and could push back towards this high from the beginning of July, and perhaps even towards its pre-hawkish June FOMC levels. That's obviously quite a big area of resistance. That's why I've got it marked up here. You've got that, early July high. You've got, if you sort of zoom out a bit more, you've got this as an area. It was an area of support, just above 0.71 for quite a long time before that hawkish FOMC, and this blue line is the 200-day moving average, so the resistance in that area is pretty good. But I think we could certainly challenge that if things go well and the RBNZ is hawkish. And to be honest, it looks like it will be, because just last night the RBNZ announced that they would be tightening some of their, it's called macro-prudential policy measures. So this is where that you can do things like increase the loan to value ratio, which basically makes it harder for people to get a mortgage, because the RBNZ basically is very worried about the housing market, which is house prices have been going absolutely insane in New Zealand. That's one of the reasons why they're one of the more hawkish G10 central banks. So yeah, things tilting hawkish for the RBNZ. Let's see if we can break above these areas of resistance in the next couple of weeks. But yeah, guys, hope you enjoyed the video, and I'll see you all in the next one.